Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, this morning global cues are mixed, but the GIFT Nifty is hinting at a higher start. Remember, yesterday we hit a fresh all-time high on the index. You know, whether or not we manage to sustain above those 22,100 levels is something that, of course, we will be watching out for. But GIFT Nifty, as I mentioned, hinting at a higher start above that 22,150 mark as we speak. But of course, lots lined up on the show over the next 30 minutes. We'll be talking about all the stocks that will be in focus, including the likes of HDFC Bank, Whirlpool, and a whole host of other stocks like Coal India as well that reacted to news flow in the second half of the session yesterday. And of course, all your stock-related queries also, will be taken up on the show. So if you have any queries, keep them coming in on our YouTube feed. We'll try and take them up with our technical expert on the show. But of course, before we move any further, let's take a look at the top headlines at this hour. Asian markets opened mixed in absence of cues from Wall Street. The US markets were shut on account of President's Day holiday. Asian markets are mixed, but of course the GIFT Nifty is indicating a positive start for the Indian market. In an attempt to stabilize the crisis-hit property market and the economy, China has cut key mortgage rates for the first time since the month of June. The 5-year loan prime rate has been lowered while the 1-year tenure has been kept unchanged. Shanghai is rather trading lower following the decision. Crude prices edge lower with Brent trading around the $82 a barrel mark. Commentary from the US Federal Reserve suggests that there is some way to go before the central bank starts cutting rates. Among stocks in focus, watch out for HDFC Bank as CEO Shashidhar Jagdishan tells analysts that the lender will maintain a healthy loan-to-deposit ratio and the focus will be on profitable growth going forward. Also watch out for Whirlpool as sources say promoters will offload 24% stake via a block deal. Let me first quickly come in and get in our technical expert for the show. Joining me is Sacchitanand Uttekar, who's a Vice President Research at TradeBulls Securities. Great to have you on the show, Sacchitanand. First up, 22,100. Do you think these levels are sustainable, given the fact that we've also seen a very sharp rise in volatility, right? With the India VIX up somewhere around 5%. Do you think we can sustain these levels, or do you think there could be some bit of profit taking that would take the Nifty below these levels?
Good morning, Nandita. And if you look at the volatility first, I think, this has been the trend for the last few trading sessions. If you look at the India VIX, it has been trending within its a very tight zone. On the higher side, 16 level has been acting as a supply zone, but on the lower side, 1440, where it's 5-week exponential moving average is placed, I think that has been providing a lot of support. So unless we don't see a breach of this particular range, we may not see any clear-cut directional move when it comes to the Nifty. But yes, yesterday we saw a very sharp rise in volatility, and probably it is again trending towards the higher end of the range. So probably we may see some immediate reaction when it comes to Nifty as well. If you look at the price action, even yesterday we saw a kind of a spinning top formation on the daily scale of Nifty, and this occurrence has been very consecutive for the last 3 trading sessions. So basically, it denotes that despite of the fact that the market has been trending higher, the conviction for a breakout move remains very low. As of now, it has been holding itself well above its 5-day exponential moving average, which is placed at around 21,980. So unless we don't see any slippages below the same, there's a good chance that we may see this particular trending move getting continued or stretched on the higher side. So as of now, I think the stance, at least for the day, remains positive to neutral to positive. On a decline, I think it will be a good idea to get into some meaningful long positions when it comes to index. The trend sequence may only violate in case 21,980 is breached in today's trading session. But on the higher side, if it starts sustaining about the 22,140 mark, we may see this particular rally getting extended towards 22,300, 22,340 during this particular week itself. So I think the overall stance as of now remains positive unless Nifty is trending above its 5-day exponential moving average.
All right, the overall setup remains positive for the day, but hold that thought, Sacchitanand. We'll talk about specific stocks as well. Let me also get on board Mayuresh Joshi, who's the head of equity research at William O'Neill India, joining in this morning. Great to have you on the show as always, Mayuresh. Given the fact that we've hit a fresh record, but the same cannot be said about the Nifty Bank Index, right? Particularly the likes of HDFC Bank and Kotak Bank, that have seen a sizable correction this year at a time when the market or Nifty is hitting all-time high, right? But HDFC Bank is in focus this morning as well, given the fact that there was the analyst day yesterday, wherein the CEO has highlighted the fact that they will be focusing on building a franchise with profitable growth going forward, and of course the focus on loan to deposit ratio being healthy as well, as in to keep them at healthy levels, to keep it at healthy levels. But this morning we have a positive brokerage report coming in. Citi has a buy rating on the stock, but here on, do you think the worst is factored in, and the stock, of course, near 52-week lows? Do you think valuation wise the likes of HDFC Bank and Kotak Bank are screaming buys at this juncture, or would you say that not right now, wait for more news flow to come in before getting in?
Morning, Nandita. Always a pleasure to be on your show. So I think two aspects here. One, obviously the performance was much wanted, both for HDFC Bank and Kotak Bank, and therefore the kind of price action that has happened on the downside largely, I think, is gestating a lot of factors that have negatively played out. So I think a structural price damage from these levels seems to be ruled out. Having said that, when does the market really expect an earnings recovery to take place in that case? So I think the base case scenario that is building in is somewhere in the first half of the next financial year is where some amount of stability will start creeping in numbers. And the second half should be relatively better. So the expectations in terms of how the management has put out in an Indian analyst day, specifically for HDFC Bank, they are not going to chase growth for the heck of it. So I think no risky advances are probably going to come out, which means they are going to maintain that pristine balance sheet that they've always been known for. And therefore expectations in terms of when will a profitable growth start taking place on a sustainable basis at some time in this calendar year as rate cuts start coming in. I think that should start changing the whole scenario on the setup for the banking industry as a whole and for a large behemoth like HDFC Bank or even Kotak Bank to a certain extent. So I think earnings recovery, real earnings should start in the second half. You will see spurts of bounce backs coming through for the stock, but in our opinion at MarketSpeed India, EPS RS rating probably looks a little bit on the weaker side, which means that the stock might consolidate for some length of time. I think post Q4 numbers, if it's able to break out of this range with very good volumes, I think that might be the time to probably get in. But till that juncture, our opinion is maybe a sideways consolidation move for both these stocks.
Right, that's the view on the banking pack, but I also want to get in your thoughts on a Coal India. Yesterday there was negative news flow around the stock, to which the stock reacted as well, right? The e-auction premium for Q4 has come down to 45% versus 117% in Q3. Given the fact that e-auction premium, of course, this is something that impacts profitability of Coal India, right? If you look at the stock, it has doubled, on a one-year basis. But here on, do you think this could be a pain point, and it could be vulnerable to some bit of sell-off or correction after this bit of news flow? And of course, the fact that they've also scaled down their production guidance for the coming quarter. How do you read into these developments?
So I think the second aspect, Nandita, in terms of the scaling down of production volume by 10 million tons, it's hardly going to make a difference, because I think there was a wide variation from 750 to 780 million tons. So I think that is not something which spooked the stock. It is more in terms of the e-auction premiums, which have come off significantly, which has taken a huge impact. Now let's understand that e-auction volumes is around 15 or 20% of the overall volumes of Coal India. And because the auctions fetch a better price, the overall blended realizations compared to an FSA, I think it stands out better on a consolidated basis or on a blended basis as far as Coal India numbers are concerned. Now, the assumption is twofold. If the auction premiums stay at the level where they are at this juncture or just bounce back marginally, you are going to expect or see an earnings cut come through specifically for the next couple of quarters, to say the least, in terms of when the recovery will take place. And to that extent, an EPS adjustment for FY24, FY25, specifically in the first half, will take place. The second aspect is this structural in nature? So in my opinion, I don't think this is structural in nature, because at some juncture, it will come back to normalized means. And at that point of time, as it does that, I think the adjustment in terms of your EPS factoring in should largely take place. So I think there might be marginal cuts based on these estimates in terms of how earning will play out. But generally, I think the developments that they're doing, the evacuation lines that they're putting up, the 3 railway lines, the expectations in terms of a stable output at this juncture, and input cost expected to remain stable, will largely mean that cash flow should continue remaining strong. Valuations definitely are on the higher side, but that gets compensated in terms of the dividends that they probably give out. So I think there are a lot of ifs and buts related to this piece of news. But I don't think that unless it sustains for a longer periodicity of time, will it create any structural damage? In my personal opinion, I don't think so. There is going to be a structural damage in terms of the longevity of premium staying at these levels.
All right, no structural damage expected here when it comes to Coal India. But very quickly, your thoughts on MRPL? What's happening there? I mean, 60% kind of gains in the last 5 sessions. Would you say valuations now have run ahead of fundamentals? What's happening here?
Oh, absolutely. And in fact, this entire oil and gas pack, Nandita, has been moving, it is moving like hot steam, right? So to that extent, when the frontliners have done exceedingly well, the upstream, the downstream companies, obviously MRPL, Chennai Petro as an example, being converters as well, I think they have jumped into the rally as well. So the expectations in terms of product cracks, the expectations in terms of margins have definitely shot through the roof. Whether they are sustainable or not is a question mark. And therefore, with such kind of moves, my own sense is you're absolutely right. I think much ahead of fundamentals, investors should be very, very cautious at these levels.
All right, some caution warranted when it comes to the rally that we've seen in the likes of MRPL. With that, Mayuresh, thanks a lot for taking out time and sharing your thoughts on these many stocks with us. Look forward to interacting with you sometime again in the future.
Sure. Thank you so much. Pleasure's all mine.
Well, that's all. Well, let's go back to Sacchitanand then and talk about specific stocks. First up, Whirlpool, of course, this will be the stock of the day, given the fact that 24% stake, on the block. And, sources say that promoters are likely to sell this stake. And the size of the block deal will be somewhere around $450 million. And the floor price has been set at a 7.5% discount to current price. But if you look at the charts of Whirlpool, Sacchitanand, in the last 1 month or so, it has been trying to make some bit of recovery, but hasn't really sustained. And in the last 6 months, it has shed somewhere around 17 to 18%. Given the fact that there will be such a large block deal in today's session, what are the kind of levels you'll be watching out for in this particular stock now?
Well, Nandita, clearly the trend remains bearish. So far we have already seen, a couple of attempts to cross that hurdle at around 1380, 1400 mark, but eventually, we have seen the price action again, oscillating lower. So I think this particular trend may continue unless we don't see the stock, sustaining above that 1380, 1400 mark on a weekly closing basis. The expectation would be more on the sell side. When it comes to supports, I think the 1250 mark could be an important support zone from here on. We don't see the stock, displaying any signs of immediate turnaround. If you look at the monthly ADX, it has just started to trend near its 25 zone, and in case if we see this particular indicator crossing the 25 mark, then probably we may see a further drag on the prices. So I think the stock is clearly in that bear trend, and we may see this particular mode getting continued. On the lower side, we may see the stock slipping immediately towards 1250 zone, followed by a level close to around 1000. So I think it's better to avoid any long position in this counter.
All right, better to avoid because the setup remains on the negative side. But let's talk about a Balrampur Chini now. The stock is in news given the fact that it will be venturing into polylactic acid manufacturing, for which it will be setting up a fully integrated facility. The project development cost is estimated at somewhere around 2,000 crore rupees, and it will have a capacity of 75,000 tons per year. Looking at the charts, yesterday the rally did pick up a bit of a steam. It was up somewhere around 4%, and in the last 5 sessions also it has been doing fairly well. Among some of these sugar names, how would you look at a Balrampur and a Sri Renuka at the current juncture?
So I think from a trading perspective, both the counters are locked within a good trading range. If you look at Balrampur Chini, it has been respecting the support at around 370. Recently, again, we saw a very good pullback rally getting built in the last 2 trading sessions. And on the higher side, the resistance is defined somewhere close to around 400, 410. So probably we may see this, consolidation getting continued. It's better to,
All right, I think there's some bit of a problem, in Sacchitanand's feed. But of course, we're talking about some of these sugar names, but also in focus will be ONGC this morning, given the fact that its arm IEL will be merging 5 of its step-down subsidiaries with itself. In fact, ONGC has 7 step-down subsidiaries in Cyprus through this arm, this particular arm that I was talking about. And post-merger, the number of step-down companies in Cyprus will come down to 3. This stock, of course, will be in focus. Yesterday the stock saw some bit of profit taking, ended flat, but with a negative bias, even though the market setup was pretty positive. But remember, the stock has run up quite a bit in the last 6 months. We've seen a 55% kind of a jump in this stock. And as Mayuresh was also mentioning earlier on in the show that, you have to tread with caution when it comes to some of these oil and gas names like ONGC, MRPL and the likes. But aside of that, also in focus will be, Vibhor Steel. Now, this will be a new debut on the bourses. It will be listing on the NSE and BSE today. The final issue price for this particular stock was fixed at 151 rupees per share, and the company or the stock may list at a premium of 86 to 90% or thereabouts to its IPO price. Of course, the listing will be taking place at 10 a.m. So we will, of course, be watching out for that. This could be one of the good or strong debuts that we could see in the market. But let's touch base and see whether Sacchitanand is back or not. Sacchitanand, because we were talking about the sugar names, but as I was mentioning, ONGC also will be in news given the fact that it will be merging 5 of its step-down subsidiaries with itself. Its arm, IEL, will be doing so. But yesterday, the stock was pretty flat in a strong market. However, the stock has jumped 55% in the last 6 months. And Mayuresh was also mentioning early on in the show that, we need to tread with caution when it comes to some of these oil and gas names. But do you think it warrants chasing the momentum right now here, particularly on an ONGC?
well, first of all, the trend is very confident. The price direction has been very sustainable. Every time we have seen a decline towards its 20-day exponential moving average, there has been a good, strong, meaningful demand which has been created. So even right now, I think it's better not to, chase momentum, wait for the decline. The current price action is a bit far away from its short-term averages. So probably a pullback towards 260, 250 zone would be an ideal support level wherein some long positions can be committed. But as of now, I think it's better not to chase momentum here and wait for a decline. The major structure holds positive unless the stock keeps on trending above that 245, 248 mark. And the weekly closing is maintained above the same. So I think there's a good scope that we may see this particular rally getting extended eventually towards 310, 330. So I think it's healthy, to buy the declines rather than chasing momentum.
All right, buy on decline should be the strategy on an ONGC. But on that note, let's start taking some of the viewer queries that are trickling in this morning. Quite a few there. First up, Rajiv Menon wants to know your thoughts on an AU small finance bank. Yesterday, the stock was fairly buoyant, Sacchitanand. And even, if you look at the 1 month chart, obviously, we've seen a 16% kind of a cut there, and it's quite a way off from its 52-week high. In fact, it's just come off its 52-week lows. But here on, what should the strategy be on this particular stock, especially if somebody already holds position here?
From a trading perspective, we may see a bounce back, but the major trend remains weak. there are signs of multiple support levels close to around 600 and 580 zone. So I think the stock may see some recovery here. On the higher side, the immediate hurdle for the stock is placed somewhere close to around 635, 640. So in case if we see this particular bounce back getting unfolded, we may see again some selling pressure near to that 640 mark. So it's better to trade this particular pullback accordingly. Keep a stop loss somewhere close to around 588 on a closing basis and review your positions somewhere close to around 635.
Right, that's the view. 635 would be a crucial level to watch out for on an AU small finance bank. The next query is from the fertilizer pack. Jeevan wants to know your thoughts on GSFC, Gujarat State Fertilizers and Chemicals. Now, this stock was in fact, has come in the throes of profit booking after gaining 50% in the last 6 months. Hasn't really recovered much, once the selling started. But here on, what are the levels you'll be watching out for? It's somewhere in the mid zone, 240 or thereabouts. Still 100 odd bucks away from a 52-week high. Do you think the rebound that it's trying to make has more legs, or do you think it will continue to see profit booking?
Well, I think the sequence of profit booking may not happen from here on, and we may see some price stability here. If you look at the weekly RSI, but despite of the fact that after falling for the last 4 consecutive weeks, it has been holding itself out well above the 50 mark. So we may see some consolidation here. I think the base which was formed somewhere close to around 220 zone, this particular base could act as a very good support. And probably we may see the stock displaying a recovery back to around 280 levels on an immediate basis. So I think it's a good zone. On a decline up to 220, one can accumulate. Keep a stop loss somewhere close to around 205 on a closing basis, and review your positions once the stock starts trending above 280.
All right, that's the view then. Hope that answers your query. The next query is coming in on a Tata Motors from Vibha Bhardwaj. Of course, Tata Motors, near about 52-week highs, has had a solid run. We're still watching out and waiting for the 1,000 rupee mark, right? Do you expect that to come by pretty soon, next couple of weeks, so to say?
Well, if you look at the daily price action, we have already seen a very strong run up in the month of January. But if you look at the February data, it is still finding itself difficult to sustain above that 940, 950 cluster. If you look at the daily RSI, again, there's a negative divergence which is unfolding. So I think I will be very cautious here while chasing momentum. It's an ideal indication that one should take some profits off the table. On the weekly scale, we don't have any specific price action, or a price pattern indicating a price target above 1,000 levels. So I think going forward, in case even if we see the breakout in this particular, in this particular counter, that breakout may not sustain. So I think it's a good idea to, take some profits off. The major trend change may unfold once the stock starts trending below the 880 mark. So I think it's a good time to take some profits off and trail your stop losses to around 880.
All right, keep 880 as a trailing stop loss for Tata Motors. Hope that answers your query. But the next one is coming in on an Infi beam from Mohit Anand Bhatia. He wants to know if it's a good buy at the current market price and what should the target and stop loss be here. Of course, the stock has, rallied 40% in the last 1 month itself. Would you suggest buying?
Well, if you look at the price action, we've already seen a very strong breakout somewhere close around 28 mark, and post that the stock did see a surge towards 40. So, we may see some time and price consolidation here. Until unless the stock sustains about the 28-30 mark, the major trend trajectory remains positive. But on the higher side, I don't see the stock immediately crossing that 40 mark. So probably we may see the stock consolidating within this range of around 30 on the lower side and 38 on the higher side. So it's better to maintain existing long positions rather than adding the new ones.
All right. Sacchitanand is against actually buying at current levels. Hope that answers your query. But The next query is coming in on the, jewelry space rather. This one is coming in from Kamalaja, and she wants to know whether one should invest in gold stocks at the current juncture, and which one would be the best bet for the long term, Kalyan Jewellers or Thangamel Jewellers. What would you suggest?
Well, I think both the stocks are trending in their respective overbought kind of a zone. So probably one could wait for a meaningful correction here. If I look at the Kalyan Jewellers price performance, it has been showing some signs of weakness around that 400 mark. Recently, we saw a very strong price surge, but that price surge was followed by a corrective price action. So I think there is a good chance that we may see the stock again, scaling lower towards 320, 340 kind of a zone. I think that will be an ideal level wherein the stock can be reviewed. On the weekly scale, we have seen a consistent, price RSI divergence. So I think it's a good caution zone. One should not chase momentum here and probably wait for a pullback to add some long positions.
All right, that's the view. Wait for some pullback before adding long positions here. But the next query is coming in from Vignesh, and he wants to know your thoughts on Happiest Minds. And he wants to know whether it's the right time to average it or should he wait for 750 levels for accumulation. What would you advise him to do?
Well, I think the stock is still in that sideways consolidation zone. Probably you can buy the stock once the price starts trending higher. As of now, the decline has been very gradual, but it has been maintaining its tail above that 820 mark, where its 200 weekly exponential moving average support is placed. It has been respecting this support level very well for the last almost 2 years now. So I think it's better to accumulate this particular counter on a breakout rather than buying it on a decline. So the immediate level that he could keep a note of is around 930. So in case if we see the stock scaling and sustaining above that particular mark, then probably we may see a major turnaround getting shaped up, and we may see a major trend getting unlocked towards 1300 zone. So I think it's better to wait for a breakout to take place and then chase momentum rather than buying the stock on a decline.
All right, chase momentum. That's what Sacchitanand advises here. But last query really for the day. This one is coming in from Juduru Pavan. Wants to know your thoughts on a federal bank. What would you really advise him to do? In the last 1 week itself, it has rallied 13%.
So for the stock, we are expecting that this particular move can extend towards 184, 186 kind of a zone. So on every decline, the stock can be accumulated. From a portfolio perspective, we can keep a trailing stop loss somewhere close to around 140 on a weekly closing basis. And on a decline up to 155 would be a good dependable zone wherein fresh long additions can be deployed. So the major trajectory still remains positive. We don't have any signs of a divergence on its monthly scale, despite of the fact that we've already seen a rally from the levels of around 80 to 160. The price and the RSI is still quoting below the overbought zone. So there's an ample of headroom which is available, and one can utilize declines to add this particular counter. So keeping a stop loss somewhere close to around 140. One can accumulate this counter up to 155 for our price pattern target of around 180, 185.
All right, that's the view on Federal Bank. Hope that answers your query. But with that, we've come to the end of the query segment. Sacchitanand, what are you spotting on the charts for our viewers this morning in terms of recommendations?
Nandita, looking at the volatility in the market, it's better to keep a long short equation. On the long side, we have Bharti Airtel, which has displayed a good strong price action in yesterday's trading session. So after a consecutive declining wave, we have seen a good base building formation at around 1100, 1120 mark. If you look at the positive crossover on its 5 and 20 exponential moving averages, we may see the stock again, forming a base and moving back to its life high levels. So that's why we are recommending an accumulate in this particular counter. Keep a stop loss somewhere close to around 1128 from a trading perspective. And sooner or later, in a week or so, we may see the stock scaling towards 1200. So this will be on the long side. On the short side, LIC Housing Finance has been facing a lot of resistance, somewhere close to around 640 mark. On the daily scale, again, we have a bearish candlestick formation indicating further weakness. We are expecting that the stock may slide back to its 20-day expansion being average support level, which is placed somewhere close to around 623. So some short positions can be deployed here. Keep a stop loss somewhere close to around 640 on a closing basis, and review your positions once the stock starts trending near that 625, 623 zone.
All right, those were the recommendations coming in from Sacchitanand. With that, Sacchitanand, thanks a lot for taking out time and joining in and sharing your thoughts on so many stocks, and of course also taking up all of your queries so patiently.
Thank you, Nandita.
Well, with that, we've come to the end of this edition of Morning Trade from me and the entire team. Thanks a lot for tuning in, but of course, stay tuned because there's lots lined up on the other side as well.